reduce its key lending rates by 0.25% to bring the repo rate down to 6%. This is the RBI's second such reduction in as many months. The measure is expected to bring down EMIs for personal, home and car loans, apart from boosting the economy by giving relief to corporate borrowers. Here's more.
As anticipated by markets and experts, the Reserve Bank of India has slashed repo rate for a second time in as many months. After a two-day meet, the 6-member Monetary Policy Committee, headed by RBI Governor Shaktikanta Das, cut the repo rate by 25 basis points to a one-year low of 6% and reversed repo rate to 5.75% on prospects of benign inflation. 4 of the 6 MPC members favoured the cut, 2 favoured status quo.
In its meeting today, it voted by a 4:2 majority to reduce the policy repo rate by 25 basis points and to maintain a neutral stance of monetary policy by a 5:1 majority.
The repo rate has come down by 0.25% to 6%. Repo rate is now at its lowest level in a year-long period. Reverse repo rate is now 5.75%. The banking regulator has said this reduction is aimed at keeping inflation in the 4% mid-term target within a band of plus or minus 2% and to boost growth. The MPC had cut the key rate by another 0.25% on the 7th of February to bring repo rate to 6.25% level. Reduction in repo rate makes it less costly for banks to borrow from the central bank. It's expected that banks will pass on benefits to their borrowers in both the retail and corporate spheres.
RBI ने जो नई रेपो रेट की डायरेक्शन दी है उससे कहीं ना कहीं जो 2.5 दी है उससे जो होम लोन लेने वाले हैं या बाकी जो मध्यम वर्गीय लोग हैं जिन्होंने लोन लेके किसी ने घर बनाना है, गाड़ी लेनी है, उसके लिए बहुत लाभदायक होगा ये।
हमको सबसे ज़्यादा मेजर प्रॉब्लम ये आती है कि लोग प्रॉपर्टी लेना चाहते हैं और प्रॉपर्टी पसंद भी कर लेते हैं, लेकिन कुछ फंड की वजह से, कुछ लोन की वजह से वो नहीं ले पाते थे। लेकिन अभी क्या है, रेपो रेट कम होने की वजह से लोगों के रीच में आ जाएगा लोन लेना।
The review also decided to keep the monetary policy stance as neutral. It revised the GDP growth rate estimate for the current fiscal to 7.2%, considering possible El Nino impact on the monsoon and global economic uncertainties. GDP growth rate had been estimated at 7.4% in the February policy review. It's estimated GDP to grow at 7.2 to 7.4% for the first half of the current fiscal. It also revised CPI inflation for 2018 to 19 fourth quarterly to 2.4%.
The MPC observed that the Central Statistics Office CSO has pegged India's real gross domestic product GDP growth at 7% for 2018-19, down from 7.2% in its first advance estimates.
The RBI governor also said that the central bank will soon issue an amended circular on the NPA resolution issue.
In the light of Honorable Supreme Court order, the Reserve Bank of India will take necessary steps, including issuance of a revised circular as may be necessary for expeditious and effective resolution of stressed assets. The RBI stands committed to maintain and enhance the momentum of resolution of stressed assets and adherence to credit discipline.
It was also indicated that though the RBI had asked banks to start using external benchmarks in December last year while disbursing personal or retail loans on floating rates starting the 1st of April, the move has been put off for now. The MPC has also said that the domestic economy faces challenges. The situation requires close monitoring till the next MPC meet in June. With Shyama Mishra from Mumbai NewsNight Desk, DD India.
And that brings up our In Focus tonight, and that is RBI's watchful push for economic growth. And we have Dr. Arvind Virmani, former ED, IMF and Chief Economic Advisor of the Ministry of Finance with us. And Dr. Virmani, first up, what is your first impression of the decisions taken by the MPC today in terms of A, the rate cut, B, the neutral stance and the revision of GDP rate as well, which is anticipated for the current fiscal?
So, first with the GDP, basically inflation has been very moderate, and the RBI was forecasting something of the order of 4% by the end of the year. Generally, the central bank looks a little ahead to determine its policy. So, even the worst forecasts are, some people are saying 4.5 or 5. But as long as for the time being the rate is very low, you just heard a 2.4 number, the last number I saw I think for February was 2.6%. So, it's still well below the 4% middle median target of the RBI. So inflation right now is moderate. The stance can always be changed. That's why they said neutral. If it starts going above 4% to 5 or 6%, then they can always change their policy. Given that inflation is moderate, the RBI's emphasis or has started paying more attention to the GDP in this policy and the previous policy, as they rightly should in my view. And therefore, given that almost everybody has been lowering their forecast, partly because the previous year's GDP was revised up. So there are some base effects which are resulting in a lower GDP forecast for this past year and the current year. The RBI has correctly decided to reduce the rates to give a signal of softening monetary policy.
And in terms of this 25 basis points cut in the key lending rate, how hopeful are you, keeping in mind that in February another 25 basis points was reduced, that this rate cut will be passed on by banks to all the borrowers, be it people like me perhaps, if I were to just cite that very close to home example, or to even corporate borrowers.
Right. So as again there's a greater appreciation on RBI about some things some of us have been saying, both the markets and people like me, that that the unlike in developed markets like New York or Chicago, just the repo rate is not enough. The RBI has to pay greater attention to long-term liquidity.
Yes.
So again, I think the new RBI governor has taken this message correctly again, in my personal view, and the view
they've
of
taken the decision on the liquidity ratio.
That's right.
Well.
So it relates to your question of transmission.
Yes.
So when liquidity, long-term liquidity is tight, there is a tendency not to pass through the repo rate reductions. So the possibility of this coming to people, the transmission, will improve if they pay greater attention to
they've done LCR, the liquidity coverage ratio,
and also they are
tweaked that about 2%.
Sorry, which ratio did you mention?
The LCR.
Right. So part of it, they are also paying attention to how banks adjust their deposit and credit rates, so that they can they hesitate to be the only one to reduce rates in response to repo. So the RBI is trying to make some rules, which we can go to the next circular issue is there, right?
Yes.
So that's kind of connected with that, and they are trying to make some rules so that it becomes easier for all the banks to reduce, so that nobody is afraid that if I reduce, the others will not, and so on.
Yes.
So they are acting on both these fronts.
Because the SBI, I think, has already decided
Right.
that by the 1st of May it will link it somewhat to the rate that the RBI comes out with, and it won't be because there's a lack of transparency right now. If it's MCLR or some other terminology that's used by banks, when they give you a home loan or a car loan.
Right. So this effort has been there for some time. It's not just the new governor. The earlier governors were also trying to think to create mechanism.
Yes.
It's not easy because the tradition from the past, and also because 70% of the banking system is really government owned in a sense, right? So this whole problem has been there for some time, but they are experimenting, and hopefully within the next year or so they'll have a mechanism which makes it easy for repo rates to be passed through to loans, for rates for people and for businesses.
So do you think that the RBI needs to do more in terms of I wouldn't say compelling the banks, but ensuring that the banks pass on these rate cuts?
Right. So
because people are anticipating there might be another one, little down the line this year itself.
Absolutely. I think as long as the inflation remains at 4%, there will be another rate cut, in my view, again.
Possibly in June, the next MPC meeting.
Right. Now, coming to the other thing, the circular had many elements. What the SC is my understanding, SC has objected is to 1 or 2 points out of a whole 20-page circular. And so it seems to me that RBI can very easily drop those rates which are specific to the power sector and certain things to do with government, and reissue the rest of the circular, which will then help both in going to NCLT, etc., in terms of bankruptcy proceeding, and in terms of the question you have raised of coordinating kind of the rate reductions and the better transmission.
because I mean the overbearing concern is that somehow this NPA crisis is tackled, and I think everybody would be keen to see that these matters are resolved in the most painless manner. That's perhaps what the Supreme Court also intended, and also the RBI.
So, I think in the public discussion I have seen of informed people, I think they are not making this distinction. You know, in the power sector there were a lot of complications, coal, government is involved because distribution is all controlled by the states, etc. It is a more complicated sector where government has a large role. So, one can separate that out from all the other sectors, the normal sectors, whether it is steel, where other places where there is competition, and there is no necessity for government to interfere in that, and that is, I think, the intention of RBI to reissue things which are applicable to everywhere else. What the government was not comfortable with was in this sector, rightly or wrongly. I think one can separate out the issues connected with the power sector and go ahead with the bankruptcy and easing bankruptcy for all the other sectors at least.
And what do you make of what the chief economic advisor has said today, Mr. Subramanian, saying that even the quashing of the circular doesn't really impact the ongoing cases of resolution or the credit culture itself, because there's a concern over there as well that suddenly all the hard work that has been done to ensure that things do not stay the course in terms of mounting NPAs, the clock will be rolled back on that.
Yeah, so clearly the issue here was of public sector banks. So clearly it doesn't apply to the 30% private sector, for one thing. Secondly, as I said, in principle it's only the power sector which is really affected, though as we discussed earlier, the transmission will become easier, and I'm sure within a couple of days or at most a week, the RBI will issue those elements of it which facilitate public sector banks going to NCLT. Because again, public sector banks are risk averse, they are afraid of these the government agencies investigating them, etc. So, it will certainly help if that circular is reissued, leaving out the 1 or 2 points which the RBI thought was not correct, were ultra vires the law.
And in any case, we've seen that even public sector banks have been recapitalized, so their hands have been strengthened in that manner by the government as well, and that would also go a long way in terms of increasing overall confidence in the economy, won't it?
Definitely. I think the more important issue was the NBFC crisis coming from ILFS, which had kind of spillovers or liquidity problems which led to other areas. Now, I think it's getting resolved, but a little slowly. So, that is really the more important bottleneck right now than just the government banks. And but what I understand is it's slowly getting resolved. So that again is a little independent of the particular issue.
Let's come back to the issue of rate cut. How hopeful are you that this time around this particular rate cut will be passed on to all kinds of borrowers, particularly, I mean, of course, retail, we're all looking forward to that, and even to the corporate sector, which does really need cheaper capital.
So, the discussion usually is between new borrowers and the existing stock of borrowers. So, generally the transmission to new borrowers is easier and does happen, but the old people, older ones get get disaffected. So, that is really the emphasis of what I was saying, that this effort of RBI to make sure that it's passed down to old depositors and old creditors, so that everybody benefits to some extent. So, I think that problem is not fully solved. So, first we will see the effect on new borrowing, and then hopefully gradually on the existing loans.
Okay, and in terms of again the overall health of the economy, to what extent can measures like these, the one taken by the RBI today, ensure that we continue on the path of growth that has delivered for the country in terms of moving people out of poverty and giving a better life to everyone in general?
Very good question. The monetary policy can only affect cyclical factors, demand factors. If there is some little weaknessing weakness of private consumption because of this NBFC problem, loans, etc., or some businesses like transport sector or something. But in the longer term, the new government, whether it's the current or a new government, will really has to look at the structural factors, what we call, or the policy reforms.
Interesting that you mentioned that, because our next story is about what the government can do, and if we could play that for you, let me just introduce it to our viewers as well. Well, Finance Minister Arun Jaitley has said that the NDA government will stay on the path of fiscal prudence and lowering taxes on goods and services if re-elected. Here's more on the remarks the FM made at the Confederation of Indian Industries, that's CII AGM, with the theme of India at 75 and beyond. We'll play that report for you a little more, but so just going by what Arun Jaitley said, in staying with fiscal prudence and of course even taxes, cutting them on goods and services, especially he mentioned cement very specifically.
Right. So we are kind of, if we look at the last, of course there's fluctuation, but we are kind of seem to be a little stuck in this GDP growth of 7 to 7.5% range on an average. And so to break out of it, I think certain reforms are needed, and one of the important reforms is simplification of taxes. Now the GST, of course there has been an effort to simplify the GST as they gone along, but there is a feeling that perhaps not enough has been done to simplify the direct taxes, etc. So I presume the finance minister is saying that is talking about that he will pursue, if he comes back to power, they will pursue this tax simplification, tax reform, which is clearly very important for the economy.
Yes, well, let me try again to have that report played out for you, what the FM had to say at the CII AGM on both fiscal prudence and of course something that we all want to hear about whenever the next government comes to power, whichever that one is. Of course, the FM thinks that it will be the NDA. Taxes.
Finance Minister Arun Jaitley said the government will continue with fiscal prudence and lower tax rates if elected back to power. Addressing the CII annual session 2019, Finance Minister Arun Jaitley said that India's growth has stabilized between 7 and 7.5%, and irrespective of global trends, domestic consumption is going to increase. Finance Minister said that India's middle class and neo-middle class will be largest vote component in 2024 polls.
By the next general election in 2024, India's middle class and the neo-middle class will be the largest vote component. And therefore, if that's the trend, the quality of public discourse and policy will have to be completely different. Politicians will be governments, politicians, ministers, leaders, manifestos will be tested and judged by much harsher standards.
Slamming the previous governments for their economic policies, the union minister said that the fiscal deficit during the UPA 2 regime was 6% and inflation was out of control.
The 6 5-year plan period, 80 to 85, the fiscal deficit touched 6.4%. When those loan melas of the late 80s were funded, in the 7th 5-year plan, it touched 8.4%. The 6% plus fiscal deficit in UPA 2 brought inflation to an average of, a 5-year average of over 10%.
Finance Minister said that the GST Council has cut tax rates on consumption items to 12 or 18% from the highest slab of 28%, and lowering rate on cement is next on agenda. Finance Minister said that over the last 5 years, the government did not increase tax rates and in some cases doubled tax base and increased tax collection. Bureau Report, DD News.
We still have Dr. Virmani with us in our studio, and it's important to talk about how this issue of sticking to the path of fiscal discipline is really, really important. Dr. Irmani, normally it's just linked to the question of, inflation. We saw how Arun Jaitley pointed out, what happened in the UPA 2 tenure as well. But it has larger implications as well for the overall health of the economy.
So, fiscal, the amount varies, but it can have three possible effects. One on inflation, the other on current account deficit, and the third on crowding out of private investment. So, at different times, depending on the environment, different effects are more important. So, but overall, clearly the fiscal deficit is important for these reasons, because it can affect any of these.
Okay. I want in this context your view on this proposal that is there in the manifesto of the Congress party, because it has become a bit of a talking point. Nyay, the minimum income scheme that Rahul Gandhi and his think tank has proposed, because again it has raised concerns about whether the path of fiscal discipline will be strayed from.
So, there is also the farmers thing which was introduced by the government. My basic approach in this, and I have written about it and published it, is that it's important to replace the existing welfare system by a more efficient one.
Okay.
And such a more efficient one I have proposed for a long time, and it's not difficult. Any new thing has a difficulty. So, really I would judge all these schemes, if they move towards a system where you are replacing less efficient welfare or anti-poverty schemes by a more efficient one, it's a good thing. If you add on another thing, it's bad.
In this case, they're saying it will be a direct transfer, which
if it is extra, it will be bad.
Non-leakage and efficient. And what are you proposing which will be more efficient than this?
The question is whether you replace in current inefficient scheme by a new scheme,
okay,
which is more incentive compatible, which is more fair. So, that is something we have to see. It applies to any new scheme. If they are just going to make a new scheme and scramble around for more money, I think that's clearly a bad, whether Congress does it or the BJP does it. On the other hand, if you replace the inefficient current schemes by some kind of an income transfer scheme of the kind I and others have suggested, then it's a positive. Now, I can't say what will actually happen, but the principle is very clear.
And then of course, in terms of policy interventions, there is a gamut of measures that could be adapted by whichever government comes to power next, to ensure that we stay on the course. In fact, perhaps even reach higher towards that aspirational double-digit rate of growth, isn't there?
That's right. So, one of them we didn't finish that discussion. The capital, the taxation of capital is among the highest in the world. Whether you take corporate or the other ways of taxing private small entrepreneurs is very high compared to Southeast Asia and many other parts of the world. So, that tax reform issue is certainly very, very important. There are of course other things like kind of basic education and skills. I think where there has been a weakness in this government, where though it was recognized that skills is very important, somehow the existing mechanisms have not been very successful in generating the skills. So, hopefully the government will turn its attention to those issues which have not received enough attention, like public sector reform, the skills generation, and even certain parts of labor reform which are not that difficult, but somehow they have got entangled in various issues. So, there hasn't been enough movements. So, there are a number of reforms like that which will be necessary if we want to break out of this 7 to 7.5% GDP range, like you were saying. If you, I don't think unless we do some of these reforms at least, we are not going to get to a sustainable 8%.
And what do you think are the key reforms there that could be targeted by the next government?
So, one is external reform. There are certain parts of external, for example, ease of doing business in the cross-border ease of doing business has not improved as much as the overall one. So, external agriculture. agriculture is still the most controlled sector in the economy. And you know, it's the 21st century. We can't keep on treating farmers as if they are ignorant and children or something. You have to give them freedom. The third one is that external this thing I already mentioned, the skills, the tax reform. Certain parts of labor can be started. It doesn't have to be a wholesale big reform.
But labor has happened in the domain of what the state governments can do.
Yes, but I'll tell you a simple one which many people have said again. Mr. Debroy had done much work on this, that there are kind of 100 different labor laws in India. I mean, the government has said that we will reduce these to 4 and simplify it. That is very doable. It's not such a big effort. So there are things you can start. Same with land leasing. You know, make it more flexible. Give the farmer more flexibility in using his land. You know, so let's say he wants to use it for industry. He wants to invite industry. Make it easier to do that. So give them more flexibility. Give them the power which we give to everybody else. You know, as I said, the farmers are not like ignorant. They don't. That have
so
no
CLU
idea.
distinction.
Yes, make it easier for them to do things. Yeah.
Okay. Okay. So that's one part to tread, and perhaps whenever the next government takes over, which will of course only be after the 23rd of May, these pointers could be taken up and fleshed out and thrashed out amongst themselves and with other stakeholders as well, because that's what it's all about, sticking to the path of progress, making progress, taking everyone on board, and of course hearing all the voices that do come up as far as a democracy like India is concerned. Thanks a lot for joining us for the moment, Dr. Arvind Virmani. Okay, moving on now. Another international honor will soon find its place on Prime Minister Narendra